All right, hey everyone. When I was deciding what to talk about today, I thought I would think about all the mistakes I've made in the last 7 years in crypto and share some of them so hopefully other people don't make the same mistakes. This is in terms of trading, investing, making money, losing money, as you can see. Those who have been around a few cycles will be familiar with this meme and this concept. If this is your first bull market, there will be a time in 2025 or 2026 when your portfolio drops 50% and you're like, it'll bounce back. It'll probably drop another 50%. And then it'll probably drop another 50%. Trust me, I've been there. All right, but before we go further, a little bit of background about me for those who don't know. I was a professional poker player for about 15 years before getting into crypto. So, that gave me a bit of a background in gambling, in managing risk, bankroll management, dealing with the mental side of it, and still I made a ridiculous amount of mistakes. It is tough to make money trading and investing in crypto. A lot of people round trip. I habitually round trip. In 2017, my first cycle, I invested about $10,000. My friend was like, hey, you should buy some Ethereum. It was about $100 at the time. I was like, great, I trust you, let me buy some. Ethereum went crazy, and then me thinking I'm a genius was like, oh, what's this altcoin? What's this random thing? What's this? And just bought, round-tripped it all, or most of it. That was my first cycle. 2021 was, I don't know, a whole other beast. I got in at the right time in NFTs. I went in with about 50K, turned that up to some absolutely stupid number, but once again, for some reason, didn't learn from my mistakes, and round-tripped most of it. It was still a good cycle for me, but I gave most of it back, and I'm going to talk about some of the reasons that was, and maybe share things practical steps that people can take to avoid doing that themselves. This cycle, I'm trying to turn what I have into something more, mostly trading meme coins. If you don't like memes, that's totally fine. This stuff applies if you're trading Bitcoin, Ethereum, Solana, anything really. But I really do think memes are the NFTs of this cycle, so to speak, in that they're going to be a crazy Ponzi bubble that goes absolutely ballistic, and then it will all come crashing down. And you're obviously playing with fire, but you can make good money as long as you get out before it all comes crashing down. All right, the first thing I always tell everyone when it comes to being a trader or investor is you have to make survival your number one priority. Too often people will they'll play with leverage. They will go all in on one particular meme coin, thinking it's the next coming. And none of it matters. None of the rest of this entire presentation or anything matters if you lose all your money and go back to zero. Not only are you out the money, but you're out the opportunity cost of what you could have done with that money. So let's say you have $1,000 or $10,000 to invest, and you decide, all right, I'm going to put it all in, Doge Whiff Hat meme coin. And it goes to zero. Okay, you lose, say, $10,000, but you also lose what you could have made if you just put it in Bitcoin. And, most of us agree Bitcoin will trend up over time. So whatever you do, make survival your number one priority. Nothing else matters if you go broke. One of the practical tips I always recommend when it comes to this is separating your bankroll or crypto portfolio into separate buckets. Have one as your long-term vault where you don't touch it or you rarely touch it. And that should be the majority of your portfolio, like 90%, 95%, maybe 80% if you have a high risk tolerance. Make that difficult to access, not something you can just randomly yeet into some random coin, and have a separate portfolio for the Degen stuff, the higher risk stuff. And I basically consider anything that's not Bitcoin, ETH, or Sol at this point high risk. Any other altcoin, any meme coin, any NFT, it's still crazy high risk. And then, importantly, is to regularly move profits from the high-risk bag into the low-risk one. Because this is one of the mistakes I made in 2021. I was making a lot of money in NFTs, and I was like, oh, great, this is, this is great on paper, and even if some of the NFTs go down, I've got some other NFTs. But the reality was, when they all come crashing down, if you haven't taken profits either into, stable coins or Bitcoin or your bank account, it all will eventually trend towards zero. All right, I think most people have probably heard the great saying, time in the market is better than timing the market. I found this Warren one where he says only an idiot tries to time the market. I don't fully agree. I think there are, especially in crypto, there are people who are able to time the market, and we've seen these 4-year cycles now play out over and over and over again. So it is possible to somewhat time the market. But there's this other quote which I find even better. It's from this book, Reminiscences of a Stock Operator. I'll just read it out. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These two are the most expensive eighths in the world. They have cost stock traders in the aggregate enough millions of dollars to build a concrete highway across the continent. Now, it was written like 120 years ago. They obviously didn't have concrete highways then, but it's as applicable to today. And what it means basically is people who try and time the very, very top within like 10%, 5%, are almost certainly going to miss it, round trip, and then they'll be like, oh, it'll just bounce back up, and then they hold. And it'll just go back up, and maybe it goes up a little bit, but then they're like, it'll go back more, and then it has ruined so many people trying to time the top, and similarly, trying to time the bottom. If you're like, oh, I'm going to buy into some Bitcoin, it's a bear market, but I think it's going to go lower. I think it's going to go lower. Trying to time the absolute top and bottom is a terrible idea. I always recommend dollar cost average. So put a little bit in as number is going down, and then as price starts going up, like it is now, maybe consider taking a bit off the table, 10%, 15%. You don't have to sell your entire portfolio. You can still have a lot of exposure if you're bullish on crypto and Bitcoin, but take little chunks out to avoid basically giving it all back. Okay, this is probably my biggest mistake. I think it's a lot of active traders' biggest mistake as well, and I call it death by 1,000 cuts. And basically what this is when like you bought a coin because you did some research, you read the white paper, you're like, oh, it's good, it's great, I like it. And then a friend in a group chat posts another coin, and he's like, hey guys, check this out, this is really good, I know the team, it's going to do really well. And you're like, all right, I'll buy a little bit of that. And then in a Discord server or on a Twitter post, someone else posts some other coin. It's a meme coin. You're like, oh, I really like that one. I'm going to buy that, but I don't have money. All right, I'll sell a little bit of the first coin and buy this one. And then you do this all the time if you're locked in and living in the crypto space. And then all of a sudden you've made 50 trades, 100 trades, 500 trades, and you keep just chipping away at your allocations, and you just die. You end up with like a portfolio of 100 tokens or 50 tokens. A lot of them are going to be junk. You won't be able to manage and track them all. And you'll lose money on fees and slippage and bot fees. And just, it's really, really brutal. It is, but it's very difficult not to do. Like, do as I say, not as I do. I currently have degened into so many meme coins in the last 3 days, just making the same problem over and over and over again. I try to be better every few days. I try to clean up my portfolio. I try and have that self-control and discipline, but it's tough. I think being aware of it is helpful. And honestly, the last point, the best thing you can do for your portfolio in so many cases is literally nothing. Like the biggest gains are made not in trading, it is in the waiting. It is in the buying good, decent coins. Literally, if you just bought Bitcoin X years ago and did nothing, you would have outperformed almost everyone. But most people who bought it, they sold it, they bought some ETH, they sold that, they bought something else, they sold that, they bought something else. Being able to just sit on your hands, I think, is a superpower in crypto, especially in today's age and with the generation that we are, with social media and all the dopamine machines trying to attack our brains. Okay, diversification is a myth. This is something that I think about a lot these days. Back in 2021, I thought I had a diversified portfolio. I was obviously very heavy into NFTs. I had some Bitcoin and ETH and Solana. But within my NFT portfolio, I said, you know what, I'm going to diversify. I don't want to be all exposed to like metaverse or gaming NFTs. So I'm going to buy some gaming NFTs. I'm going to buy some PFP and community NFTs. I'm going to buy some historical NFTs. I'm going to buy some NFTs on Solana and other blockchains. And for a while, I was feeling pretty good because there was a few months where, art NFTs would drop, but PFPs would pump. Or, historical NFTs would drop, but art NFTs would go up. And it kind of felt like I had a diversified portfolio that was working. But the thing is, in crypto, everything is correlated to Bitcoin. Like, absolutely everything. No matter what you say, if Bitcoin drops 50% next week, every other coin is going to crash. Like, there's just no two ways about it. And so I think diversification is kind of a myth within crypto. If you want true diversification, you kind of have to consider it as crypto and then stocks and gold and real estate and stable coins and like things that, if one thing goes down, the other one is not going to go down. And that's, I think, a big problem that a lot of people, or like a trap a lot of people fall into, including myself, thinking you're diversified when in reality you have 90% of your net worth in crypto and Bitcoin crashes, everything goes to shit. Another problem with over-diversification is that it leads to portfolio fatigue and an inability to manage your positions. Now, there's an exercise I like to do where every now and then, let's say every couple of weeks, I'll literally sit down and write down every token I hold. And then in a Google Sheet or Excel or even pen and paper. And then in a column next to it, I'll start to rank them 1 to X in my conviction level. There's always going to be a token you have the most conviction in, Bitcoin or Solana or whatever it is. And then if you go down that list, you'd be like, all right, that's the second most token. That's the token I have the second most conviction in. Third, fourth, fifth. At a certain point, you've got your entire list ranked. And then you have to ask yourself, let's say you have 50 tokens. Why are you holding the bottom 50% there? Or let's say you have 20 tokens. Why are you holding the bottom 10 tokens when there are 10 other tokens you could just sell those into and allocate into the ones you have the highest conviction in and have a smaller portfolio to manage and generally do better in terms of your returns. There are reasons to have more tokens, have like moonshots and moon bags and things like that. But I think you need to have an explicit, specific reason for each token that you own. And if you go down that list and you can't give a really good reason, and it's like your 27th most conviction token you have, consider selling it. And I think even consider selling it if it's down from where you bought it. Another trap a lot of people fall into is the sunk cost fallacy, where they buy something at a certain price, it goes down, and they think, oh, just when it gets back to that price, then I'll sell. Whereas you really need to put the past out of your mind. The only thing that matters when it comes to trading and tokens and crypto is the price it is today and what you think it's worth today. And if the price is more than what you think it's worth, you should consider selling. Probably sell. Find your highest conviction plays and stick to them. All right, the Magic Wand thought experiment. I just Googled Magic Wand. I was trying to find a meme. This came up. There's no kids in the audience. All right, we're good. It'll stick in your minds. All right, so the Magic Wand thought experiment is a thought experiment I do myself, and I think everyone should do from time to time. Basically, imagine like fairy godmother comes along, waves a magic wand, and liquidates your entire portfolio. Every single token, NFT, whatever you own, just goes into stablecoins, US dollars or Australian dollars. You can forget about like fees and slippage and tax and just put that out just for the sake of the thought experiment. You liquidate everything and time freezes so that the prices of the tokens stay the same. Would you rebuy every single token you have the exact same amount or not? And I think that a lot of people, especially later into bull markets, when they do this experiment are like, no, I wouldn't. Because imagine you buy an altcoin or a meme coin for $1,000 and it goes crazy. It does a 50x or 100x. Now, all of a sudden, you have 50 grand or 100 grand in this meme coin. Maybe you've taken a little bit of profits. But when you think about it from the thought experiment, had you not invested that money, or had you not had those holdings, but you had the cash, would you then go and put $100,000 in this meme coin? And I think the answer to that question for most people is no. And so doing this thought experiment periodically, I think, helps rebalance your portfolio. And you can be like, you know what, things got kind of crazy there. I have way too much in alts. I want to put some into Bitcoin. I want to take some out into my bank account, put it into fiat. And I probably do this thought experiment once a week myself. I really recommend doing it very regularly. I think it can lead to some revelations about your portfolio and lead to good things. Okay. This is something I learned in poker, and it is just as applicable to crypto and trading as well. The mental game is everything. It doesn't matter if you find good tokens early, if you have conviction, if you have good alpha, a good network, if you have a lot of money. None of it matters if your emotional state is regularly, if you're just going on tilt. If you lose some money and you go crazy and you chase your losses, or you make some money and you double down and go on leverage without really thinking about it. I really think that the best traders, just like the best poker players, just like the best sports people, are not necessarily the ones with the best technical skill. It is the ones with enough technical skill who are able to regularly play well. Regularly make good, calm, pragmatic decisions. There's a quote, can't remember who it's by, but it was some chess player, and he said, "It is not enough to be good at chess, you must also play well." And I think about that a lot. Like it doesn't matter how good you are, how smart you are, how good you are at technical analysis. You actually have to apply it regularly and not make mistakes. Comparison is the thief of joy. I think everyone is lying if they say they haven't been on Twitter or Reddit or YouTube or somewhere and seen someone make 1,000x, they've turned $500 into $2.5 million and they see that all the time and they're like, oh shit, I'm losing money, I'm doing something wrong. I think everyone is always comparing themselves to other people in this space, in life, in the social media world we live in. It's gotten even worse. The only person you should compare yourself to is yourself, your past self. It is the only metric that matters. It is so simple, but it is unimaginably hard to do. We all do it. I do it all the time. Like 2 weeks ago, I was trading meme coins. I was losing money. I was doing bad, and I was like, oh my god, look at all these people around me. Do they know something I don't? Am I terrible? Have I lost my edge? And I just kept comparing myself to others, and I really had to work to snap myself out of it and remind myself that everyone is on their own journey. Everyone is doing their own thing. They're in a different place. They have different risk tolerances, different bankroll amounts. Maybe they're just getting lucky. A lot of the times they are just getting lucky. Maybe you're just getting unlucky. And so I think remembering that the mental game is everything in crypto and trying to avoid comparing yourself to others will put you very far ahead of most people. Okay, let's say you've made money. Everything's gone well. It's a bull market. You've taken a bunch of profits. Keeping it is more important than making money. Like, anyone can get lucky on a meme coin. Anyone can get lucky buying something and having it go up. The real skill comes in actually keeping the profits to yourself. And in these days, it basically means in your bank account or maybe in Bitcoin or stable coins if you're comfortable with that. I'm a big believer of, people always want to make life-changing money in crypto. They're like, oh, I'm going to get into crypto, change my life. I'm going to make $100,000. I'm going to pay off my debt. I'm going to buy a house. People have these lofty goals. Life-changing money is not life-changing money unless you actually take it out of crypto and change your life with it. So many people make life-changing money and then they round trip it. Think about tax from day one. It is something I've spent like 10 months this year dealing with tax and speaking to accountants, tax lawyers, crypto tax, reconciliation experts. And the one point that keeps coming back to me and I hear over and over and over again is the earlier you think about it, the better. Be proactive, not reactive. Because there are things you can do now that will save you so much money in the future, whether it's setting up a company to do your trading through, or setting up a trust to help spread out gains, or tax loss harvesting. There's a million things you can do if you sit down and talk to an expert, think about it, plan it out, because some of it can be fixed in the future. Sometimes you can make a bunch of money, speak to an expert, and they can be like, you know what, we can do this, 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 and this. But a lot of the times, it's too late, and they're like, oh, I wish you came to see me a year ago. Could have saved you 40% of your money. Wish you came to see me 2 years ago, et cetera, et cetera. Think about tax from day one. I know it's boring, it's not fun, it's not exciting, but it is unimaginably important, especially in Australia. Use a hardware wallet. I mean, this one is simple, but again, it always surprises me how many people don't use a hardware wallet. If you have a significant amount of money in crypto, and that's like $1,000, a couple $1,000, get a little hardware wallet. It's $50, a ledger device. It will give you peace of mind. It will make your assets so much more secure, and do it now because, again, you don't know where things are going to go. If things go really, really well, all of a sudden you have $100,000, $500,000 in crypto. If you don't have that hardware wallet set up, there will probably be a period where you're less secure than you could and should be. So everyone get a hardware wallet. As your portfolio and net worth grows, your goals and attitude towards trading and investing will shift, or at least I think should shift. And basically this is, when you have less funds, you want to accumulate. You want to turn it into more. You're maybe more willing to take risks with $1,000 than $1 million or $100,000. And I think a mistake that a lot of people make is applying the same strategy with $100 as with $100,000, where they're like, oh, I'm going to buy all these meme coins, I'm going to take these risks. And there's a certain point where you reach where you no longer need to hit a 10x or a 5x or a 3x. If you can get a 30% return a year, it's unimaginably good in this world. Like, the stock market is like 8, 10, 12% maybe if you're lucky. If you can outperform that with a big enough bankroll and portfolio, that's good enough for most people. And I think crypto makes people greedy, and especially as you start getting more money, it's just human nature to get more greedy, and you just start thinking bigger, and it's like, oh, well, I wanted to get a house, but maybe get a holiday house, or an investment property, or a boat, or around the world business class trip, a car. Everyone gets, the goalposts shift, and I think that checking in, again, the magic wand thought experiment, checking in periodically and looking at how much your portfolio is, reevaluating, looking at your goals, I think will serve people really, really well. Just on the tax piece, I want to shout out Matty in the back there from Crypto Tax Made Easy. Anyone need tax help? Go speak to him. He's an expert. All right. Don't get married to your bags. Like, the reality is, basically everyone is here to make money. When I was first getting into crypto, I was very here for decentralization and for the culture and for the art and for the movement, and I still believe in all those things very, very much. But I've come to realize that 99.9% of people in crypto, they just want to make money. And you can want to make money and believe in the other things. They're not mutually exclusive. But everyone wants to make money. It's one of the core things that I think between humans and especially within crypto. One of the ways people don't make money is when they get married to their bags. They get to know the team of a project and they feel guilty or bad about selling it. They get to know the community of an NFT project and they feel guilty or bad about selling it. Same thing for a meme coin, or for whatever. Or they bought something and it's not at the price that they paid for it and they're waiting for it to get back. You have to be ruthless. You have to take emotions out of it as much as is possible and think logically and pragmatically when it comes to money and trading. Otherwise, you will get eaten alive by the people that are doing that and don't have their emotions and their ego and their I guess, personal connection to their bags. One thing I wanted to say, I didn't put a slide on it, but I thought about later, is journaling. I think keeping a trading journal, an investment journal, is probably the single best piece of advice that I ever got myself and that I could give anyone. I have heard the same advice given from basically every best trader I know out there, every best investor. They keep a trading journal, they keep an investing journal. Doesn't have to be much, but at the end of every day that you make some buys or sells, write a few lines. Get it out of your head. It helps you be more present. It helps you think through your decisions. It helps you understand why you bought something. It helps you reflect on when you made good decisions. Maybe you made some bad decisions that day. You FOMO'd into something and you got rugged. And when you put pen to paper, or if you want to type and you type it, it reinforces it in your mind. And journaling is good in real life. Journaling is especially good in trading and investing. All right. I think we have time for questions. I don't know how we do that here. There we go. Oh, we got a mic coming too. Perfect.
Just on the last one with regards to journaling, how detailed are you getting? Like, is it just like an Excel spreadsheet with price and all that other stuff in there? Or we're talking like Dear Diary kind of stuff, like, hey, I feel like I went into this and just FOMO'd in, or what's the story?
Yeah, good question. A bit of both. So I have an Excel spreadsheet where when I buy a token, in a column next to it, I have like a notes column where I'm like reason for buying, and I write down, why am I buying this? Because too often people just yeet in and out of things, or why am I selling it? But then I also keep a separate, more detailed journal where it is like, all right, today I bought 3 tokens or 10 tokens. I think I bought too many. I was tired because I didn't sleep well last night, et cetera, et cetera. Just like actual proper sentences and journaling.
And do you separate them between trading and investing?
Sorry, can you a bit louder?
Do you separate it between trading and investing as well, separate journals?
No, it's the same for me. You could do that. Just find whatever works for you, I think, basically.
Thank you.
Yeah. Any other questions? We got about, yeah. And then maybe you can get to the back.
Just someone like myself, this is my first bull run.
Sorry, can you speak up a little?
Sure. Yeah. For someone like myself, this is my first bull run. I've never actually been in one before. I've been getting coins for probably the last 4 years now. I've been mining them, been particular coins that I'm looking at. What's your view? Do you think the bull run is going to happen with the altcoins this year like it has in the past, or do you feel that it might be a little bit different because of the way the market's going on other aspects of what is happening at the moment?
So you're asking about altcoins and if
Yeah, do you think they're going to pop like they've done in the past? So obviously in the past they've done very well.
Yeah.
Bitcoin's obviously starting to peak already, but the altcoins haven't come along yet. A lot of people say that it takes 6 to 12 months after Bitcoin sort of peaks. In your view, do you think that will happen this year as well?
Yeah, okay, it's a good question. So gentleman was asking about, is there going to be an altcoin season, basically? Bitcoin is obviously running. Will altcoins have their time in the sun? I mean, the answer is nobody actually really knows. I think there will be. For the whole 4-year cycle, every time Bitcoin runs and then alts run afterwards, I've been saying for a while, you can't continue that over and over and over. It's too easy for that to keep happening. But at this point, I believe it until proven otherwise. And I think that there are a lot of catalysts for an altcoin season coming soon. Quantitative easing in America and interest rates coming down and Bitcoin hitting blow-off tops and things like that. I think next year will be altcoin season. And if you look at a chart of Bitcoin dominance, so when Bitcoin dominance goes up, altcoins are generally struggling and losing money against Bitcoin. It generally goes 3 years of Bitcoin dominance, and then the post-halving year, so 2025 or 2021, is when alts really, really run. And that's when Bitcoin, it might still go up, but relative to everything else, it doesn't run up. Basically, short answer, I think there will be an altcoin season. Hopefully, I'm very heavily exposed to alts. Like 80% of my bag is in alts at this point, so yeah. Yeah, I mean, okay, sorry, I'll wrap up real quick. The best advice is, it's good to be heavy in alts if you think altcoin season is coming, but be aggressive in taking profits because it will very quickly turn. And there'll be a point where things start dropping and you think they'll go back up. And they might, but that's a good time to start taking 10%, 20% off the table, just in case they just keep dropping and dropping and dropping. Because in a crypto bear market, alts will go down 90%, and then they'll go down another 90%, and then they'll go down another 90%, and they'll never come back. So, yeah, just be careful. All right, thank you, everyone. If you have any other questions, I'll probably just hang out back outside if anyone wants to come ask me. Thank you.